So Frank, we were talking about increases in taxes affecting retirement planning. So specifically, where do you see tax rises being an issue, and how will that affect IRAs and 401ks?
Well, tax rates will be a big issue because in a rise in tax environment, it's going to mean more dollars that have to be taken out over the long run. I think Ed Slott has always said that he predicts taxes will be the greatest detriment to people's long-term retirement savings, and also he believes government will make IRAs their #1 target.
And can you just briefly explain how taxes will separate people from long-term goals?
Because it'll be like another level of inflation. All right, and if they need, let's say, to take $100,000 out a year,
right,
and today that could be projected as needing to withdraw $150,000. If they have to take $170,000 or $180,000 someday instead, that's going to have a strain because they're going to have to not only sell off more of what they own, but they're going to have to pay more taxes on the additional dollars they have to withhold.
So moving forward, what should investors be thinking about?
They should be thinking about having the ability to at least balance among tax-infested assets, as I also call them, and tax-favored assets. So that way they're in a position at retirement to maybe be in better control, where they know that there's a certain amount that they can withdraw, where they'll be taxed at a 0 bracket, at a 15% bracket, maybe even a 25% bracket based on today's rates at least.
What else should people be thinking about?
They should be thinking about the fact that, you know, IRAs, as attractive as they are, all right, they need to be thinking about how they can maybe possibly consider switching some of them over into a Roth IRA.
Okay, and what are the benefits of that?
The benefits of that are, if the person's going to live longer, they have the ability to stretch that money out tax-free over a lifetime, especially if they live beyond life expectancy. If, let's say, their overall return, more optimistically, they project that they think they're going to be closer to, let's say, double-digit returns, then they should be thinking about having more of those assets tax-free, even if they have to pay at a higher tax rate right now. Another thing they need to consider is if they want to leave money to their family or their children someday and leave it to the next generation. That's another major factor they have to consider as well. And the most important factor for today's discussion is, do they think tax rates will likely be higher? And based on the deficits and numerous data, it suggests the strain that governments are in with record level deficits and the national debt, that they probably are more likely to want to consider having those assets tax-free on the back end.
You talk about the government. What would be the difference between the government perspective and an advisor perspective?
From the government's perspective, and this is very political, and this is my personal and professional opinion, they only think of what the problems are today, and that's just usually been the trend. And the problem today is they need to have more money come in to mask some of these deficits and deal with the constant stress in spending and the constant need to somehow raise taxes. So as far as the future and being able to have money stretch out tax-free over a lifetime, assuming it's properly allocated, they personally don't think that far down the line. And that's been my opinion. However, from the advisor's perspective, is we have to consider what the long-term effects are of balancing asset classes properly, taking advantage of where IRA assets are best managed and where 401k assets are best managed, as well as the Roth IRA. So there has to be some culmination, in my opinion, that gives us the strength and the flexibility to know where we can get at tax-free dollars at a certain time down the road in case we're already entering, let's say, a higher tax bracket.
So what would be your final message?
My final message is, I think we have to be advocates. We have to be very passionate about getting out there and taking the opportunity to make a difference in people's lives financially. That's what they need us for. And we have a chance to make a difference to prevent people from someday running out of money, prevent people from someday not having to go broke while they need to be possibly in a nursing home, to allow family legacies to continue, because I think values can best continue, in my opinion, if there's money there, tax-free money especially, to help continue those values. So we need to look at clients very holistically, understand exactly how their life insurance policy is to date. understand exactly how they're combining assets based on changing needs and objectives. I think it's a very important calling, and I think clients out there really need us to do what we do best today more than any time ever.